Redfin says that home purchase contracts fell at the highest level in a year. Is that true? And is it significant? What does it mean? Well, we'll get into that. This is my real estate weekly update. I'm Bill Gross at Bill Gross Probate on social media. In order to look at the Redfin story, let's first set the table on where we are in the market and where the statistics are. I always say that in real estate, you have, or any economy, you have two factors. You have demand and supply. Demand, buyers typically determined by interest rates. Supply, the number of homes for sale, would be inventory. And those are the two key factors to keep our eyes on. Let's take a look at the actual data. On the rate side, we did bump up again yesterday to 23-year record highs. You can see that the interest rates all year long, especially in June, were between 6 and 7%. August went above 7 and never came below. And we've been flirting with 7.5 and have not quite got there yet. Now, does that mean they're going to go up or not? I don't want to predict the future, but clearly they're a little higher than they've been, and that's taking some of the steam out of the economy. That's what's designed to do. So rates have gone up a little bit. We need to pay attention. If you're a buyer, make sure your rate's locked in. If you're a seller, we want to make sure your buyer's contingencies are all waived. How about on the supply side? You have a few less buyers. Are there more houses for sale that will cause housing prices to crash like we were talking about for the last 2 years? Well, not really. Here's the inventory. Terra Datum is the source I use. And you can see that we still have about record low inventory for all time. This is 2 years ago, the height of the pandemic, which was the record low. This is last year's number, which is the next record low. And you can see from a pre-pandemic point of view, other than during the pandemic, we would have twice as much inventory for sale. So we can't have a crash unless there's too many houses, and we are a long ways from having a crash. Here in LA, the market is softening ever so slightly. Altos Research has a great tool they call the real-time market profile, and they give a ranking based on those factors, and they inched it down from 43 to 42. It's still a seller's market, but more slightly. And you'll notice the per square foot, what we're getting per square foot of home sold, it costs $815. Just a few weeks ago, it was $857. That means each square foot of home's worth a little bit less. Now, that means there's more sales in the lower end than the high end, skewing down, as well as homes with a square foot of house is worth a little bit less than it was before. That's a key factor, I think, to watch going forward. Okay. Now, what's happening with home prices in the end of July, beginning of August? We had the reports of home sales down significantly. Now, this should be a standard news item, but you'll see the same information being reported differently by different news sources. So, for example, CNN Business, home prices continue to climb in August, even as sales drop. So they're reporting sales dropped, but prices were basically insignificant. Okay, and those two facts are undeniable and would be true. Next, we'll take a look at CNBC. Their headline was, home sales stick near recent lows, accurate, in August, but prices continue to climb. Okay, so again, they're putting together the combination of overall sales affecting on prices. So again, fairly accurate. Here we have, though, Yahoo Finance screaming, housing economist warns of 8% mortgage rates after home sales disappoint. You would think what they're saying is because home sales are down, that's causing economists to predict rates will go to 8%. None of that's true. The economist has nothing to do with the sales. He's looking at the mortgage market and the interest rate market overall. And he doesn't really warn of 8%. All he says, if you read the article and not just the headlines, that in the short run, it's possible that mortgage rates may go to 8%. It's possible. It's possible they stay where they are. It's possible they go down. It's possible pigs could fly. So he's not warning of that. That's taking that out of context and making it into a screaming headline that they're hoping you will come on here and then click on their various advertisements. So again, this is bad news reporting, I think, from the real estate news industry. But it goes worse. Yahoo Finance double dips. They have another article stating mortgage rates top 7% for 6th straight week, which is true, but could go higher. Could go higher, could go lower, could stay the same. Isn't it interesting? The news is never enough for these people. They always have to have in something, and it's always dramatic and almost always bad to scare you. Why would you say they could go higher when there's no basis for that necessarily? There's nothing in the article suggesting that's their prediction. They're just looking for some bad news to spice up the headline to get you to click on their information. And that's one of the fundamentals of the real estate market. Now, the worst of the week, the award for the most misleading information, again, I don't know how many times they've won this. If I was giving awards, they'd be retiring it, goes to Redfin. So Redfin has Redfin reports, which is meant to be data. There was a time that Redfin was a great source of data. Let's take a look at Redfin announces home purchases fell through at the highest rate in nearly a year in August. Now, to be honest, when you say a highest rate nearly a year, not even a year. It's not even the highest rate of the year. Nearly the highest rate. Not the highest rate. That's number one. But that's not bad enough. Let's take a look at their basis. So they have a graph. And of course, in today's world, you have a graph. Most people can't read numbers. Most people know numbers. Very impressive. Here's the almost highest. You'll notice not as high at 15.7 as last year, peaking at about 16.4%. Not as high as 2020's 16.5, 17%. But all of this looks worse than it is, but notice a couple things. Number one, whenever it went up, it immediately came back down to the normal. Went up, came back down to a newer normal. Went up, what would we expect to do? Number one, notice that. Number two, look at the exaggeration. This is the almost highest in a year, not the highest, the almost highest. And let's say the average is maybe 12 to 13%, 12 point something. So this looks much higher than this, right? The current rate looks much higher than the lower rate. But in reality, they're exaggerating it. They're fooling you. Notice on the far left of the graph, the bottom is 8% and the top is 18%. Now, why would you have those numbers? They're kind of arbitrary. It just makes it look dramatic. The truth is, theoretically, every contract could be canceled by a buyer in this market. And so the theoretical maximum is 100%. Also, maybe 0 buyers cancel their contract. And that means the bottom theoretically should be 0. Really, this graph should be plotted on 100 to 0 mathematically to show the real impact in the marketplace. But what happens is by plotting it over a total range of 10%, 18 to 8%, it magnifies the differences by 10 times. So it looks to be significant over this year or overall. In this case, a 3% rise is about a third of the chart. But if you take this chart and stretch it up 10 times, up and down a little bit, it would be insignificant. You wouldn't even notice it. So we're left with a statistic that says really not even the highest cancellation rate of the year has happened. And every time it's ever happened, it's rebounded right away. And then, by the way, we're going to give you a graph that's exaggerated. And so what Redfin does is they have this echo chamber. They put out this information to other sources. So here, for example, is Money Magazine. And they take this and they write a headline, "More home buyers are canceling sales at the last minute." And if you read this, this is all just a parroting of the Redfin news, fake news. But notice they need a more dramatic headline because when you look at your news source, whether it be on your phone or on the computer, people are going to look at the one that stands out the most. So this says more home buyers are canceling at the last minute. Well, hold on. Redfin didn't say it was the last minute. They just said canceling. Who says the last minute? Where'd that come from? That's not in Redfin's report. That's not in Redfin's data. Also, more home buyers than who? Who is it that's canceling? More home buyers than what? More home buyers than last year, 2 years ago, than a month ago? Is that even saying anything at all of significance? But again, they've, I'm sure, tested this and have editors not designed to be accurate. This isn't a research report. This is just pure garbage to get you to click on their report, and then you can see their little clickbait placed. Here it is, Quicken Loans, right in the middle of the article. So if you're worried about canceling sales, there's Quicken. You can give some money to Money Magazine by clicking on their advertisement right in the middle or their little advertisement on the bottom. And so that's how the real estate news works. Put out some information that's maybe significant, maybe not. Exaggerate it, send it out to a bunch of news sources. They'll exaggerate it more. And next thing you know, you have people paying attention to something that's really not that big a deal. So what's really happening? Well, I think the market is softening a bit. The reason why the Fed, the government, is raising rates is to lower sales of everything. We shouldn't be surprised. So yes, it's another reduction in the energy of buyers, but we still have plenty of buyers. We had an open house today on Friday, one of my listings in Whittier. We had 9 or 10 people go through, plus 2 of our clients go through. So there's still plenty of people looking for property today in this market. It's just not as much as it was a year ago or 2 years ago when the COVID was more significant. So what should you do? Don't follow the news. Let's put a plan of action together. If you're looking to buy, let's get you pre-approved and a game plan ready to execute to get you the best rate and the best deal in the house. If you're looking to sell, let's get a game plan together to get you top dollar for your home. As always, if I can help in any way, please reach out, call, text, or email me. If you like this video, please like it, subscribe. I appreciate the support. Put a comment in. What do you think of Redfin's report? Am I being too hard on them or am I being fair? I'd love to hear from you. As always, make today your best day ever.